Good afternoon, welcome to the morning report from IG. It was a pretty rough night for European markets. Again, everyone's still focusing very much on what the long-term implications of the Cypriot bank levy is going to potentially be. We have seen a few different officials suggesting that after the recent commentary about using the levy as a template, we've seen some people backtracking on that and saying that it's still a unique case. There's probably no one else out there who's going to need to see that, but we are seeing confidence lost in the Eurozone. We're seeing those flows out of the euro, and that continues. We saw the euro dollar trading down to 127.51. Euro Aussie continues on its downward trajectory and has closed below some key psychological levels, and we believe that we'll probably hit 121.50 at the moment in the short term. We believe that until we actually see some divergence perhaps coming through the RSIs or stochastics, which suggests that selling has been exhausted, you continue to look to sell rallies until we see a reversal in that. But we are seeing the Cypriot issues still continue playing out. We know that banks will reopen tonight. There shouldn't be a huge amount of issues there, given that they've got very, very stringent capital controls in place, both for businesses and individuals as well. So there's not going to be a massive, in theory, there shouldn't be a huge run on any of the Cypriot banks going forward. The big issue now is really around Italian politics. We saw a big spike up in Italian 10-year borrowing costs last night, up about 20 basis points. If you look slightly shorter term, on the slightly further to closer down the curve, you see five-year BTPs up about 25 basis points as well. We did see Mr. Bersani, who's the Democratic Left head of the Democratic Left Party, trying to form a government. He couldn't do it. Mr. Beppe Grillo, who's basically the protest vote, the ex-comedian, suggesting he had actually no interest in working with Mr. Bersani. I don't think that's necessarily going to surprise anyone. But he goes back, Mr. Bersani now goes to the president and will come back with his findings. It doesn't look like a government's going to be formed. There will have to be an interim government which will be appointed by the president. Who's going to head that up, we're not really sure. That could be someone outside of the big parties. But as well, we did see Italian borrowing costs moving up because we did see quite a poor bid to cover on their 5- and 10-year borrowing auction last night that we saw coming through as well. So we're going to keep our eyes on that. We're going to keep our eyes on Italian banks and European banks going forward. But that does seem that the path of least resistance at the moment is for the euro dollar and the euro crosses to continue lower. And we're looking to potentially continue selling rallies in those pairs in the short term until we see sentiment improve. Perhaps the ECB next meeting could herald some better times for the euro, and I think Mario Draghi will potentially come out with some calming rhetoric which could see some inflows back into the euro. So necessarily we wouldn't want to be too short going into that meeting next week. Here in Australia, we are expecting a slightly weaker open, probably down about 7 points or so. It's going to be an interesting day. We do have private sector credit at 11:30, which is expected to increase by about 0.3% on the month. It's going to be an interesting day given the fact we do have month end, we do have quarter end, and of course it's the last day before Easter, so liquidity could be scarce as a lot of people look to take an extended break. So there's going to be some interesting flows today, some portfolio readjustments going into that end of the day. It's been interesting because we have had a very, very strong quarter here on the ASX 200, perhaps lagging something like the Nikkei, which is up about 20% on the quarter, certainly lagging the S&P, which looks like it wants to test a new high there as well. So you may see some profit taking, some people looking to reweight back into more fixed income orientated products globally. But I think what we're seeing is good strength on a monthly basis. Not so great. The market's down about 2% or so, and I think it looks like we're going to finish on a pretty flat note today. We may see a bit of people running a flat book into the weekend, given the Italian political situation. And I think the S&P really got picked up quite nicely from the lows. At one stage it was down 0.7%, but it finished on the flat line, and all eyes now on that 1565 closing level. 1576 on the S&P is the intraday high. We did see a number of Fed officials coming out, Rosengren, Kosh-Lakota, with some pretty dovish comments, certainly more than what the market was looking for. Charles Evan as well on the Chicago Fed side, and that boosted the markets that they're going to be in the market with longer liquidity boosting measures than anticipated, perhaps keeping the asset purchase program extended to the end of the year. Certainly part of the reason why gold had a bit of a boost as well last night. So all eyes really on Italy tonight. Keep your eyes on the Italian borrowing costs, keep your eyes on the Cypriot banks, see the sort of control that we're going to be seeing there. There's not a huge amount of data. Most of the data we're going to be seeing comes out of Germany, of the unemployment numbers and the retail sales numbers as well. But it's interesting days, and hopefully we can see the S&P break and make a new high there.